Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
I just pulled the Forex Factory, see what kind of news we get today. Are you seeing the Forex Factory now, Eva, Christine?
Yes.
Okay, good. All right, I'm on the right page then. And it looks like at 8:30 we have some core retail sales for the U.S. dollar. It's at 8:30. Red folders. That's about the only major events we're looking at today. Today's Friday. I'm not going to take a lot of trades today. My performance this week was pretty good, so I'm not going to give it back. And Fridays are oftentimes, they don't always play by the same rules that we usually end up using when we take our trades. We try to be disciplined with a certain strategy. Sometimes it seems like on Fridays, those strategies just don't seem to work as well. So we'll look at trades. We'll we'll analyze them, but I'm not expecting to take any trades unless it's just one I just can't keep my fingers off of. Then I'm going to, I'll probably pass on the trades today. But we'll look at them. And let's see, now you should be seeing my charts, yes or no?
Yes.
Yes, okay, good. Hey, okay, I'm getting the hang of this thing. All right, so I had to reset my charts a little bit. I'm on my laptop today, so I don't have quite as much screen real estate to be looking at. And we do ask that if you have any questions or comments that you put them in the question and answer box. We'll be more likely to be able to address them than if you put them in the chat box. So let's just take a look and see what kind of setups we may have here. Looks like we have a British US on the 15-minute. Let's take a look at that one. And where is the chart? Come on. How about? Now, why did that not come up with the arrow alert on that? Let me put my template on. That could be a problem. Okay, here we go. Here's the British US. Let's just make this one big and analyze it here. Right now, we're looking at, we have all our moving averages are pretty much in the right direction. And they did cross over the 200. We have an up arrow. It's not a pure back entry. We do have the entry right on the close of, actually the open of this last candle is where the entry of this was. I don't know if there's enough room to the upside. There may be. Let's see. We'll analyze this. We're going to scroll out. See how many red zones and green zones we have. A lot of green zones, not too many red zones. That means it is in an uptrend. We did get a bounce off of this level. So I'm going to put an up arrow by this last green zone. Scroll out and see what we have for a target possibility. And let's see, we have, here's the entry. And actually there's a lot of room to the upside on that. Let's check the lower time frame, see if there's any areas of, there's a little red area right there that we're right coming up into. That could be a problem on a 5-minute chart. And let's see, how deep is this area? 10, 12 pips. That's a fairly strong rejection of that zone up there. You can see this is where we had a bounce arrow go, but we have a red zone right here on the 5-minute. So again, I'm going to pass on this one right now. If we get a strong move above this red zone, I may be tempted to, I say then we might be okay. But right now, this zone seems to be holding pretty well. You can see the overnight session just went right up into about halfway up, got rejected. It did close out above this little pivot high right here. And we have a nice little trend going up, all the moving averages in the right direction. We're getting the 5-period moving average coming up to challenge the yellow one. They're both pointing down, so I would like to see this thing start pointing up. I would not want to enter this trade until I got a close above this little pivot right here. And if we did that, you'd have 6 pips till it broke through. It still has a little bit of, it would still probably take a little bit of heat before it broke through that. But I would like the area more up here as if you wanted to take this trade to the upside, I'd probably put a buy stop in up here. That way, if it breaks through that, then there's a probably good chance it could, there's a lot of room to the upside and all the way up to from here to here. That's a 70 pip move. So there's a lot of room to the upside if it can break through this little red zone. So I would be patient with that. It could take a lot of heat on it because right now it's sort of range bound. You can tell from the London session, it's been pretty much in a range between this lower green zone and the upper green zone. That's this 40 pip range for the last several hours. So, and
yeah, Garvin is also saying that it's overall uptrend on the 1 and the 4 hour charts, and that the ADR is not exhausted for the day. So he's agreeing that there's a lot of momentum to the upside.
He's saying that there is not a lot of momentum to the upside.
There is a lot. Because, yeah.
Oh, there is a lot. Okay.
Yeah.
See the ADR 47. Yeah, that's right. 47. That's 47 to 105. 47 of 105. There's a lot of room to the upside. Well, we'll keep an eye on this one. Like I said, I don't like giving back my profits on a Friday, and I oftentimes, if I try trading on a Friday after I've had a good week, trying to get that little bit more, I end up regretting it. So Friday is probably my least performing day. So
that's demo day, right, Al? That's when we demo.
Well, yeah, today's maybe a good demo day. Now, the only problem is that in my demo platform, I'm trying to maintain a track record. I'm trying to maintain some consistency. And whether you're trading, I mean, if you just say today's a demo day, I'm just going to play around and go for it. But just remember, when you take trades that are, even if it's in a demo day, if you say I don't want to trade on Friday, but I still want to trade disciplined, I still want to trade the sequence, I still want to trade the trade plan, by all means go for it and do it and practice with it. But don't just say, oh, let me just take this and just see what happens, because that you're starting to train your brain to pay attention to things that really aren't so. So you don't want to just haphazardly take them. You want to say, this does fit my trade plan. The only reason why I'm not taking it is because it's a Friday. And you say, okay, I'm going to take it and see what happens. Maybe Fridays will turn into be better days. Who knows? And with that, let's continue with this exercise on this one. The British US, we're going to check and see. We haven't checked our heat map yet to see what the British US is doing. So let me go and get that on the British. Oops, there we go. Right now on our charts on the strength of the different currency pairs, we were looking at you can see right now the US dollar is the weakest, the British pound on the 5. Here it's right in the middle, so you can see that's probably where it made its run up a little bit. It's going to be coming off the bottom, but it's in the middle here. The British is in the middle. We have a 3-point spread on the 1 hour. We have a 5-point spread on the 30, 5-point spread, just got a little bit stronger here. And right now it's still thinking here on the 5-minute chart. So all in all, we would want to be taking this to the upside. It does have enough strength to take that trade. And so I say this is a viable trade. Everything's moving in the right direction, but we got to get through this. I'd like to see it get through this little red zone. And there's still, it came up, wicked into the 1.4082 and 8. So basically you have about another 5 pips, it looks like, to 6 or 7 pips about where it is right now. This is a nice little move. It's a nice move up, nice little pullback. Looking at it, let's expand this on a higher time frame here. Now there is no zone on this one, so that's kind of encouraging. Here's the money. Here's the break of the where the money zone. Here's where the money zone is. This is the start. This is the start of the London session right here. You can see this candle. Here's where the highest wicks of during the overnight session came in. This wick broke out. Would have taken a little bit of heat. That was been a 16 pip. You've been taking a little bit of heat on that, and right now it broke out, came back, have a nice little trend going on from here to here, and it pulled up, pulled back. Here's a retest. This is where this could be starting. This could be the leg 3 coming in right here. So this does have some nice momentum on this right now. Well, I'm almost tempted to take this myself. Let's see. From let's draw Fibonacci. I'm gonna draw it from here to here. We had these. Looks like that was about 61% pullback of this move. Now we're looking at. Put this one to a. We'll spread this out a little bit. I'm going to move this over to here. Now we'll take this to where this thing pulled back right about in this area. And pulled back to the 50%. It's starting to break through the top. At this point, the 50% line would be right here, would be a target, right about in this area. And I would like, so I'd be looking at this, it'd be a target zone, initial target zone from this retracement back here to the moved up. Let's see, moved up, pulled back to the 38 to 50, is breaking through the top. This would be the next zone. And I'd be looking at, let's see, from the top of this red. It's always better to get it on the pullback, but I'm not big on breakout trades. There's 8 pips to the zone. I mean, there's still more room higher. If anybody entered to this trade, it's let's say you could probably keep your stop below this blue line somewhere in its 50 to 60 zone, and you could maybe have a nice little trade there.
So the S&P had a pretty good recovery.
Oh yes, yeah. I didn't watch the charts yesterday afternoon. I was on the road, but I did hear that it was up about the S&P or the Dow was up about 500 points or something like that yesterday.
Yeah, it's still got a ways to go up to where it came from, but it's almost halfway there. So
right.
That's good news for many of us.
Yeah. For those of you who are trying to go along with, and that's even like with the S&P, it's just like I would be looking at trying to buy some deep pullbacks because I don't think this thing's ready to tank yet.
Oh, there you just got a couple of new alerts. The Euro, Aussie, Euro.
Let's take a look on this one here, Euro Aussie. Oh, there, that one came up all right. And let's take a look at the chart on this one. We have put my moving averages in, templates, load. We have some consolidation of the moving averages right now. Euro Aussie, let's check our the Euro and the Aussie. The Euro is in the middle, Euro Aussie. Aussie's strong on all 4. Euro's weaker. We do have a spread of 3. It's not a bad range on that.
I'm going to check out the Euro New Zealand while you're having a look.
Okay. Here's the arrow, and this is on a 15-minute. Are we here on the 15-minute? Here's the arrow. Here's the range to the target. 18 pips. That's within range. Here's our 200 moving average. That would be the target. It's right there at the top of the range. So the euro is showing the strength to the Aussie dollar, which is the second currency of the pair. It's showing strength to the downside, and it's. I would be looking at it looks like here's a bounce arrow. Go. This is a bad trade. Now, let's see, big question is, are we in the right direction for the overall trend? It is going to be contra trend. We have more green than we do red. So this would be a contra trend move. But I find that to be not a big deal breaker, is oftentimes this time of the day. My bigger question is, does it have the strength based on the other currency pairs? And right now, this one does seem to have that. And I'll look and see, go down to the 5-minute chart to see if there's any zones a little bit closer. Here would be you only have 5 pips to this area right here. That could be, you'd probably have a little bit of trouble. You are getting all the moving averages are, it's just now crossing to 200 on the 5-minute period. I would like this target down here being a little bit better target. Yeah, like a level on a level. I think this one could possibly get, it's going to have to get through this little wick. There's a lot of wick right here. This is where the buyers came in, coming back up, coming back to see if it's going to retest this. From a Fibonacci standpoint, from this move to here, you're going to be looking at, you're probably coming right in on the 78% retracement. Actually, it broke the 78. It's coming into the 88.2%, which is basically the midway between the two. Right now, it's in the bottom 25% of the move, and it's I'd be more apt to see it maybe break up here, come back down and retest, give us a third hit from this trend from the bottom of here. We'll see where this comes down. This will be the anchor. Here would be the hit. It's deep into the zone. This is where this whole move originated, and now it's just coming down to retest this. I kind of like it better is if we can get a close. I'm not real fond of this one to the short side. It's too close. I would like, at this point, I would like to see a close. It wicks down close above this line right here. This is the 78. This is the bottom 25%. A rectangle in here. Here's the lower part of the zone right in here. Here's the upper part of the zone. Call this one up. Here's the upper 25%, actually 23.6, if you want to be specific about it. And it's coming down bottom here. So right now I'm thinking it's going to be range bound inside this area. It did trend down. It shot up, come back down slower, come back down, test it, and a good chance it'll come back up again. I think there's probably a little bit more support down here than what meet the eye. I would be wanting to see this thing wick down, close above the 78, and then maybe you can start looking at as this move up, if it comes once it crosses the 61.8 and closes, so we're looking at that for a target. If it comes up here, closes, look for that for a target. Comes up here, it closes, look for that for the target, and then start looking for another reversal. Right now, I'm looking more for a reversal to come back to the upside. So if we can get a up arrow, even on like let's see what it looks like on a 1-minute chart here. That's a relatively strong move down, coming back down, testing. Here's our moving. If we can start getting a 5-period moving average to cross the yellow and start crossing and start taking out these little moving averages, then I think we're starting to look into going back to the uptrend. So right now I'm saying we had the hit. This is a rejection of this point. We drew that. If it comes back down, it hits it again, or it starts breaking through this high, then I think we're starting to reverse our trend direction. So I would not want to take this one short, and excuse the dogs in the background. And so that's that one. So let's see, how's our British This one's starting to take off. Anybody get into this trade? I'm seeing this thing starting to, let's see, let's take a look at this thing on a different time schedule here. Let's see where this thing came from. It came from this move down here. I like this move, and now starting to come back up and retest this area. This would be the origin of the move. Come on down, came down, bounced off, came back, retested, formed this little, a higher low right off this bounce. And now it's starting to trend to the upside and starting to break through these 38, 50, 61% barriers that were created on the down move. Let's see, right here was that's the 50. It's coming up to retest the 61. This is right where we had that target zone was. This was a nice little move up, closed above the 38. Next one's the target is the 50. Closed above the 50. Next target is going to be the 61. So I think there's still room to the upside. I think it's probably going to come up and tag that. And that would be nice. That would have been a nice little trade, actually. Yeah, another 8 pips to the upside. We did get to, we're on a 15-minute chart, closed above on a 15-minute candle. And this is where the up arrow came in. And I say we're looking at the 61.8 as a potential. And it could break through that. It said the red zone is all the way up here. This is all the way at the 100% retracement. I would not be taking it. I would be starting to look at profits, at least inside this 100. Any place above the 76. If you're in this long, I would start looking at making sure you're out of the trade somewhere, especially if it wicks up and can't hold that. You may want to exit that trade. But I do like this zone up here. I think this is actually probably going to be a pretty good little trade, actually. Here's my tool here. Trade rectangle. Here's our upper 25%. Take it right here from the money zone. I say that's going to be your target zone to the upside from that down move. It has a potential. And let's see what else. What have we got here? So that one's still working out very nicely for anybody that took that one. Euro New Zealand. Let's see what that one's bringing us.
That one's very similar.
Yeah, that one's very similar. It came out down pretty much the same one as we were looking at with the Euro Aussie, I think. Same scenario. Moving averages are good. Had to cross the 200, but we have the zone to bounce. And if we look and see what the overall trend is, it looks like it's in the uptrend. Not by a lot, but it is nonetheless. Here would be looking for a bounce off of that. Strong move up, retraced, actually broke through this little strong move up, came back from pivot from this area. There's the hit, there's the anchor, here's the break to the downside. So it is in a downward, the Euro New Zealand, check our, let's see where our Euro and New Zealand. New Zealand's strong on all four. The Euro is catching up to it. So this thing could probably, I'm going to guess it's probably going to get a little bit of a bounce off of that green zone. And that's about all there is with that. It did break through this trend line from here. But we also have another, if you make another parallel to from this one, just parallel the other, make that into a channel. That'd be about right. It's probably gonna come down, probably retest that. You have the channel here, the parallel here. A lot of times these things form channels, and so that if you ever get into like pitchforks and things like that, you'll see that it's nothing more than the parallel of the tines of the pitchfork, and this would be like the lower tine of this. So it's breaking through this little zone, coming in. I would be looking more for a bounce off of this than a continuation through this. So I would not want to take that one short. And I'll take that one off. And let's see anything else. Nothing on the British, nothing on the Bitcoin. And basically look at the Euro Aussie, Euro US. Euro Aussie, where's the Euro US? Do I have that one? Let's take a look at the Euro US. Probably gonna be the same situation. Yep, same thing. Euro is pretty much doing the same thing across the board. Moving down, coming into a zone. Everything's moving down, moving averages are good. It's on the 15-minute, look at the 5. Look at the 1, see if anything's starting to consolidate and switch directions on that. Not yet. I see no zones on the 1 minute down below either. Let's got a little bit of, I see no zones at all in the 1 minute. We probably do have someone. That's where the 5 minute, I believe, was. Yeah, right below here. We'll mark that. Now would be a good time for some questions and comments if anybody has anything they want to look at or questions they want to ask. They just kind of call this Open Mic Friday, even though you don't have your mics turned on. Feel free to ask questions of things that are of maybe a little confusing to you or need a little clarification. Let me check my question answers. I know Eva and Christine keep on top of these things pretty well for me.
Yeah, there was just one in the chat. Are we taking any trades today?
Yeah, I almost wish I kind of regret not taking that British US, but I'm trying to stick. Part of the thing about trading is to stick with your trade plan and stick with your discipline, and be more concerned about your performance than you are about the money that you're making. Because if you can have consistent performance, the money will come. And nothing more disheartening is to have a good trade week and you're trying and not put the toys away and just keep on taking the trades and giving it all back on a Friday. It's like why we do this? And like I said, I've had a really good week this week, and I just don't want to give it back. So I'm going to look at this. But I mean, this thing fit all the criteria. The euro was strong, and it looks like it. And one thing that was mentioned earlier is the ADR, the average daily range. And if you're looking at the British US, and you see where the average daily range on the British US is 105, and only did 50 of that, that's a pretty good indication that things are, there's still a lot of room to that. There's room to on the upside for the daily range, and all of our strength meter was saying go long on it. There was a road zone to be looking to break out. It looks like it did break out of that red zone. The red zone's no longer there right now. And it did form another green zone right where we put this. Here's where we look to say, okay, that this little blue area right here was where we were starting to try and have our stop below that. Had the upside, had the up arrow, and right now it's still a viable trade. You certainly would have gotten your 5 pips out of it from where the alert was. Let's see, this alert was at, what time was this at? This is pretty much, C7, that was 6:50. We had another one, was that 15-minute was we had the alert? Yeah, it was on this one right here. So it was off of this candle, the close of this little red candle. So the alert came in right at this point, right there. And it didn't hardly pull back at all. All the moving averages in the right direction. And we measured our target to be right up here at our target at the 61% extension off of that. These are the 61, the 50, and the 38 are all measured off the, I believe off the down move that we had earlier from this point down. And now it's starting to cut through these are key barrier points. Anything, when you start getting in, start looking for these target areas, and it starts closing through like the 38, if it closes to 38, you're looking for the 50 as a target. Closes above the 50, you're looking for the 61 as a target. Right now, and we did get the close above the 50, which is right here, which is right where the money zone was. This is the 50% range. This is the point that was 50% of the down move, from the high of the down move to the low. It right now is retraced it to the 50%, and oftentimes it'll retrace 50 to 61. By the time it gets to the 61, it start looking to maybe come back, and then you start getting, that's where you start getting your wedges, where you get your lower highs and higher lows off of these moves. So right now we have the lows down here. Here's the low, here's a higher low, here's a higher low. And you can almost take this from here and move it down to where you have the first hit, which is right here. Extend the line out. And you can see it's starting to, this one came down. Here's the hit. Now this would have been the first test, and never really did touch the trend line and rejected it. So this area, this 23 was right here, and that's right where it came down to reject it. Now it's starting to make these higher moves. I still look at seeing this thing as possibility of hitting through this target and maybe even going up to the 76, which still means this thing is range bound between the red zone and the green zone, but you can see it's trending inside that range, depending on, and this is all on a, that's a 1 hour chart. Same thing with the 15-minute. Just a matter of, but you can see it's trending inside of a sideways range. It's really going, the bigger picture saying it's going sideways, but inside that picture, you're getting some trending going on. Strong move down, pull back, strong move down. This is the retest area, which is really pretty much right where we are right now. And I think you're going to see a little bit of a bounce point off of this, where this blue zone is.
Excuse me, Al.
Yes. Yes, Christine.
Chantel had mentioned in the chat, is it better to use the fibs on the hour versus the 15-minute?
I think so. But I think I don't like using the fibs much. Well, let me explain that. I like seeing the fibs on a time frame that gives you a reasonable amount of distance in between these zones. For example, if you're on an hourly time frame, there gets to be a point where the Fibonacci, the movement is so small, even a big zone, that these little zones in here are only like just a couple pips. Now this, like on this, I'm on a 1 hour chart. You can see the zones between 30 and the 23, for 38 and 23. You can see that's like, right now that's 19 pips. That's about 20 pip zone, which is that's a very comfortable area to be working with. If you get down to like a 1 minute chart and you draw a fib, say on a 1 minute chart, say we'll just use this for example, and you have here you draw your fib. Now you're looking at between the 20, say between 38 and the 50, you're looking at probably only a couple pips. That's that's not even 2 pips. So the moral of the story is you want to draw a fib on a time zone that gives you the range, but also gives you enough of a area of pip range in between these sections to where you can take a trade. If you only have 2 pips in between the 50 and the 39, you only have 2 pips. That's not enough to take the trade. It's not enough to base any opinion on, because it's not even tradable. But if you go to a higher time frame and say, okay, well, now what move am I going to be looking at? Now you say, okay, well, maybe I can take this one from, say from this move down here to here. And I'm on a 15-minute chart. Now let's see what kind of range I have in between here. Now I can measure this up and say, okay, if I can, and that's only 5 pips. So even that is marginal. So you want, again, you want to make it so that the higher the time frame, the wider these areas are going to be more than likely, and the more tradable and the more value you can put on these zones. Yeah, hopefully that helps answer your question. I prefer to draw my Fibonacci's on 15-minute or higher. I will do it on the lower ones if I'm looking for retracements and just really small target areas. But usually 15 minutes is usually about my starting point to where I'm going to be drawing the Fibonacci's. And I'm always looking for the strong move up. I'm not, these smaller moves, these are the moves that you try to get in and get out, get in and get out on the way down. But when you get the strong move up, like for this area right here, I like that move up. And then I'm looking to see, okay, where's it going to retrace? Where's it bouncing off of? And I'm looking, so right now I'm seeing it, okay, now it's in the lower 25%. Now I'm waiting for it to be pulling back. And once it starts working, and it's having to start working its way up into these areas. So like from here, I'd be looking at this as a target. I would be looking at this for a target. But if the range between these two are, you can see that, see 56, let's see, 56, 54, 56. See, that's only a 5 pip range. It's about as marginal as I would want to get. And when you start seeing that, you may want to think, okay, where was the bigger move? Then I might look and say, okay, let's take a look at this one over. If I can move this thing over, if I can't. I may be looking and say, let's take a look at this down move, strong down move. Came back down, retested, made a little bit lower low, wicked out, and now it's starting to move us. So this was a little bit of a divergence right in here, and I'm not sure what the strength of it was at that point in time. But strong move down, came back up, wick down below here, strong big wick, and but it couldn't close below that. So that the fact that it couldn't close below that point, here's the lowest close, here's the wick, and then it was rejected. Came back down, and it came back down, and it made a higher low. And you could draw from here to this was made a higher low. This one was a higher low. This one didn't really have a wick on. This one just came down, no wick at all. You can see how flat that is. This one came down with a wick with a strong rejection. I like this level right now better. It did break through this, but now I'm looking to see from the Fibonacci standpoint, redraw this from over here. I would probably take it from this big wick down to this wick. Here's my zone. I used the wicks because there was price action at that point. It was tradable. I try not to ignore the wicks. I try not to break through the wicks any more than I have to. I'll allow it a little bit of a breakthrough. But for example, even if I were using this point to this point, this was a first breach of the trend line off of this. And I'm kind of looking at, here's a hit. Now this thing just broke down a little bit. Let's say it stopped off this point and had a little bit of wick off of that. I'd accept that one time on the trend line. I'll accept a little bit of a breach. I won't accept a close. I don't want to go through any bodies of the candles. So right now from this move up here, here's our upper 25%. Here to here. That's the upper quarter of the down move. Let's get this out of the way. Here's the lower 25%. Here's the zero line. Here's a 25% line, or 23.6 to be exact. And so this is the range, and you see it came right on up to the 25, rejected it. I expected it came to this point, took off. Up here, rejected. So right now, I would not want to be taking it short. I'd be waiting for it to come into this area and then giving me a little bit of a turnaround structure on the, I can go to a lower time frame to see when the moving averages curl over. Go to the minute, 1 minute chart. You can see right here, the green just came down, came up the yellow, tested it, came back down, came back up again, it's testing it. But right now, high, low, lower high, lower low, this is trending. Strong move down, retracement. Not as strong a move down, starting to retrace. This could be a little bit of a divergence. If we can start getting this 5 period to cross the yellow and start taking out these zones, then look for a pullback. And now you can start be looking for these targets right here. Here's our 50%. Here's my 38%. I like to see it close above the 38. I like to see the moving averages starting to turn in the right direction. And then you can maybe start taking a trade if it comes up to, if we get a move up to here, get a close. I prefer to see at least a 5-minute close. 1 minute's a little iffy. And maybe see a pullback to give me a higher low. Then you would have a trend something like this. And then from that point, it already closed above. We know, so now it's looking for this for the target, find a pullback, and then take it to the upside. And if you look right now, this is the last part of a W that we often talk about. The W's are at the end of the move. There's your W. First leg, there's your W. And it goes up to top and then reverses the same position. Same way over here. You look at the move up. And again, I like looking at the stronger move up. Came back down. Comes back up, retests the left shoulder to here. And now we have the trend. We have our high, higher low. There's our trend. Here's our M, and here's the break. Comes back down. Now you can start looking at, and up here it came up. Here's here's our 50% line. Broke, looking for it to hit this target on the downside. Comes back up, pulls back, and you can see where it finally came. It challenged it a little bit, but it did finally come down, closed it, and this trend line was holding. Oh, wrong one. Try and grab this. There we go. Here's the anchor. Here's the first hit. And you see it did break the trend line here, but it also formed a lower, it couldn't break through this little area. Here is your trap. Here's your trap right here. Here's your anchor, here's your hit, here's your retest, broke, but it couldn't break through this area right in here. It still made a lower high. Again, over here, still made a lower high. This little wick right here. And then it finally, but you can see right now from this one, came right down, tagged it, couldn't close it. And so, but you still could have got you still could have had your target out of this. Almost. That's 4 pips. That would have been tight for if you're looking for a 5-pip stop. And let's see. So right now, this thing's still playing around down here. It's still bouncing off the green zone. Bring this one down. Bring this one down. Look at this. So we're just making projections. We're not banking on it yet, but we're looking to see what picture am I looking for before I'm going to take this trade. Well, we have a down move. Now I'm going to be moving these over a little bit. We didn't get to close. I'm still waiting for this thing to close above the 38. I said, remember, I'm on a 1 minute chart. That's as low as it goes. But if I can get a close above, as this thing moves across, as the prices move across, these moving averages are getting lower and lower. And I want to see this green one cross and close above this yellow. And that's going to tell me that maybe we're starting to get the reversal that we're looking for. You can see this thing's coming right on down into that point where I drew this as a projection. I don't want to see this thing come up and break through. Like here, we had a low, came up, didn't break through that, made a new low. But look at this wick right here. This is a nice little fractal low. You have a low, nice little wick, have a higher low to the left, another higher low to the left, have a higher high, a higher low, and now it's starting to break up through. Now, now it's been testing this blue line all the way down. As it gets up to that, let's just see what it does when it gets there. If it closes, again, I want to see it close above this, then get a pullback. Have the pullback respect this low. I don't want to see it go any, I don't want to see it break the bottom of this. Maybe a spread's worth, but that's about all. More than likely, I want to see this thing come up. And if you draw a Fibonacci line from the low, oh, shoot, what's this? Trying to get my fib here. Let's just do it this way. Let's leave those. I still have these marked here. So from this low, I want to see a pullback. I want to see it extend out range-wise enough to where when it comes back, as it comes back, I'm going to look and see, watch for it to come back and retest somewhere between the 38 and the 50, wherever that happens to be. Move this out of the way. That's what I don't like about MT4. It's just cumbersome sometimes.
Yeah, it's like 20 years old, right?
Hey, Matt. Good morning.
Hey, how are you, my friend?
I'm doing good. So here's it. So right now I'm looking for this thing to come up and break. The further this goes, the wider these zones are going to be. The wider the zones are, the more room you have to get to your targets. And so we have, see where my zones are going to be. I'm looking for something to come back into this area right in here. So if this thing comes up, retests. Now here's the 78 right here, which this is the zone that I do not want to see it break through. Here's my lower 25%. So we have it come up. Now, if it comes back, actually, I'd like to see it come back into the 78% zone and then reverse back. That way, I know I've got some range. And now I'm going to start looking for on the upside to start crossing through this one, through the 23. Now, if it comes back to the 78, and you look for a range to come up to like the upper 25%, again, that's only 5 pips on a 1 minute chart. It's still not a lot, but it's going to give you a better entry if it does decide to break through here and come on up. If this thing comes back to the 61, it comes back to the 60, say it comes back to the 50-60 zone, and it can break through this one. Now we're looking at it coming up to this zone up here. And this would be the next target. Here would be the 50. Depending on how deep it comes back, this would be the target. It pulls back to 38, which is right here, pulled back to 38. We've got the cross of the 1 minute of the 5. Get the cross. We're getting, it's starting to try to break through the top. If it can pulls back 38, this is your next target right up here. Now from here to here, now we got 4 pips, the 50%. Let's be a little bit more aggressive. Again, lower time frame. You're on a 1 minute chart. You see what I mean about drawing the fibs on these lower time frames is that you don't have the range that you're really looking for, but it does allow you to get an early entry. If you look at this move over here where we have, here's our trend line. Here's our anchor, here's our hit. That's the third hit. Here's a third hit on the trend line, pulled back to the 38. I could probably take this trade, Euro US, let's see where the strength is on it. The Euro is strong to the US, strong to the US. US is still the weakest. You could probably justify taking that trade to the upside off of this pullback now that we have the crossover, and this 5 crossed over the 13. It's crossing over the arrow moving average, and it's moving to the upside. This could be a viable trade.
Well, on this trade.
Oh, you broke up there. You want to say that again?
I've got a couple of questions for you on this trade.
Okay.
Eric is asking about the stochastic and the RSI. I know I don't see you using the stochastic, but his question is, he likes using those two, including the moving averages. Do you ever use them to see how they correlate? For example, on this pair, the RSI is oversold and it's starting to change the lower moving averages.
You know, I used to use stochastics and RSI all the time. I stopped using them because I just didn't see much value in them because I found them to be too lagging. So I just sort of stopped using them. But you can see right now it's coming right on up. It came back to the 38, coming back up. I would be taking, and you got your 200 moving average right here. I'd be taking your profit right about now if you got in that trade.
And Rashid asking, sorry, Al, just if this is also for this trade. Rajiv is asking, would you consider the 62 before taking the trade?
The cross of the 62?
I
like the 62 moving average a lot. I use that for, I like seeing once things break the 62, then especially if the 62 is starting to curl to the direction that I want to take the trade, I like that. If 62 is moving straight down, like here, at this point right here, I would not want to be taking it, but you can see it's sort of flattening out right in this area. When you get on the 1 minute chart, things happen really kind of quickly and you don't have a lot of time to debate the issues. Now, if I look at this on a 5 minute chart, you'll see that, I mean, it's, I mean, I use the 62 a lot. I only just recently started using the 200 moving average. Before I just used to use the 5, 13, and 62. But you see this came right on up to there. And so now yeah, so I guess I'm not sure how to answer that question. I do use the 62 a lot. I like that one. That's usually, if the 62 is above where my near my target, I'd be using that 62 for a target zone, just like I use the 200. Now you can see this, everything was moving, everything's starting to break through this 200 moving average, which is this purple one right here. It's actually starting to consolidate a little bit.
Does that answer your question, Rajiv?
Yeah, if not, re-ask the question, maybe I can answer it a little bit better.
So about stochastic, I use 533. I just started using it actually. I didn't pay a lot of attention to it prior to, but I do use it in conjunction with other things. So I don't use it standalone. I like to use it with trend lines.
Interesting. When I started trading the foreign exchange market, the 533 stochastic was my main go-to indicator. And I used it for quite a few years, and I could never really quite get it to, it was just it just didn't serve me well, I guess. I found other things to use instead. I like the trend lines a lot better. I like this RCS tool, the RCS tool that we have. I really put a lot of emphasis on that just to see where the strength is with the other currencies. And that really helps keep me out of harm's way. It gets me into trades that it gives me that confidence that the trade may or may not work out, or to stay out of the trade or to get into the trade. This is probably the one I use the most. I find that to be more valuable than the almost any other indicator, to be honest with you. Let's see, where to go?
US is super weak, eh? Today?
Yeah, the US is weak today. Yeah, the week it was the weakest all the way around. Now this one's starting to come back up a little bit. As we get closer to the 9 o'clock and 9:30 hour, you'll probably start seeing the US get a little bit stronger. New Zealand was strong on all time frames. It's starting to give up a little bit of strength here. But no, 5 minute, that's when I start seeing things change on the 5 minute. I'm just looking at if everything else is still staying pretty solid. I look at it more of a pullback. For instance, like right now, New Zealand, US, New Zealand, US, New Zealand, US. Trade to the strength of New Zealand, weakness to the dollar. And this is just saying this may be pulling back a little bit. It may be in a little bit consolidation zone. Let's take a look at that. So we come back over to our charts. Let's take a look at New Zealand USD. Assuming I have it here. Actually, I probably don't even have it on here. I need to add it on here. Let me get it. New Zealand USD. Chart window. Close that out. Put my template on. Here's my New Zealand USD. We said New Zealand was strong. New Zealand is the first currency of the pair. It's the strongest. We're going to trade it to the upside. Actually, this one looks really pretty good. We had a nice little down move. I look for the down move. See where my fib zones are. This is something that's already there. They're sitting there waiting for us to use them. Get a close above. This one came up, closed above the 50, pulled back a little bit, hit the 50. Closed above the 50, hasn't pulled back yet. If it closed above the 61, it's probably going to head on up to the 71. Here's my upper 25%. I try and use that area as my turnaround points. 25%. Here's my upper zone, upper 25 of the down move, strong down move. Base, came back, retraced, strong move down, came back, made a new low. It really didn't come, it just came back from this move up, broke the 23, came back into the zone, and it started taking off again. Mark this. There's a lower 25%, came back, tested it, broke. Here it came up, broke the 23, came back. Here's our low retracement. And if you can draw, let's see if I can do this. You can do it in TradingView a lot easier. But anyway, here's our 38. Here's our 50. Here's our 61. And now we're going to see what it's going to do. I'm on a, see what time frame am I on here? I'm on a 1 hour chart. Let's go to 15 minute. Are we just about done for the day here? What time is it?
It's only 8:30, man.
Oh, I can't see my clock on here.
No, you're
good.
fine.
Oh, good.
You're
We got lots
fine.
of time then. We got lots of time. Okay.
That actually looks like a pretty good potential swing trade setup, doesn't it, Al?
Yeah, it does. I like the fact, again, here was the bottom. We still have the strength of the New Zealand to the US, but now we're coming up into this zone. This is a 15-minute zone. Let's see what we have here on and you see that it came up, broke the 38. Here's our retracement. So a lot of times what I'll do is when I see a break like that, I look for the retracement. Now that you can maybe do, you're not going to get as big pip move. I'm still looking at these zones. But if I look at from this point here, here's our impulse move. Here's a retracement. I'm looking to see where the retracement move is. How deep does it retrace before it's going to be looking for this? It broke here. Here's the origin. Came up here. It broke the 38. Came back. Now I'm looking for the retracement back towards here to give me enough room to make it up to this one. So from here, it pulled back. You can see here's the range, pulled back 38% of this move, which is right here. And then my target is up here. Is there enough room? That's 15 pip target. That's about as good as it gets. You see how that worked? It broke the 38, came up. Now I'm looking for the now if you can't really take it here because from here to here, you only got your 5 pips. You need more pips. You need more room. So you can say, okay, well, if I want 15 pips before I enter my trade, then I can say, okay, let's do it. Let's project this. If this is where my target's going to be, and I want to be able to get in with a 15 pip to my target, that means it can bring it back to the 30. If it comes back to the 38% on that retracement, actually, let's do it this way. If it comes back, so we say, here's my target. I say I want 15 pips to my target. Well, that's my target. Where can I get in to get that 15 pips? So we decided it was a 38. So basically, if the price moves back into this zone somewhere between the 23 and 38, which is one of our key numbers, if price comes back in here, I'm going to take it long on this pullback. It's starting to respect the blue moving average. It already broke through the 38. I want to have my stop 15 pips below. So if I get in right here, I can have my stop 15 pips. Well, guess what? That's right there where the 200 moving average is. Well, that's about, so if it's tracking this, my stop should be well out of harm's way. It'd have to get through this moving average, have to get through this zone. And all I have to do is go for my 5 pips to get up. All I have to do is get up to this zone. That's a 15 pip move. Same thing here. You come up, there it broke. Now this one didn't really retrace this one. Here's the origin. Oops, here's the, it broke the, let me pull it back here, just line that up a little better. Now, let's see what number, that was off this. It broke this yellow line here, which is what we found off the down move. It came up here, it broke it, closed above it. I'm gonna move this up to where this last pullback was. And I'm gonna say, okay, here's my target. Here's my 15, here's where I want 15 pips from here. Come back down to 15 pips. If it breaks through this line, this 11 line, if it can break through that, now I can move this up to, because I remember what I was saying is that if it breaks this line and closes, waiting for a pullback to be able to use this for a target. Well, pull back to this line. I had enough 15 pips to get to that. Here's my entry. Here's my pullback area. I prefer to see it come back maybe a little bit. Whoops, wrong one. Oftentimes, I like to see the 38%, which is, well, pretty much right. Here's the 38%. It never came back to retest that one. But you see what I mean? It came back, bounced. You go down to buy stop on this one. Say, okay, I take it. There's my 12 pips. Looking for 7 pips. Hit the target. Now look at that wick right up here. You have that wick right there and didn't close above, so I can't really take it because I'm also right at the 61. We've already gone through this one. These are the 3 main ones. Came up, wicked above. Now I might be looking to see, okay, if it comes on up here, here's the origin of the move down here. Now I can start looking at this thing maybe coming back to the downside where I can move this thing down to, move these down to, like, here's my 50, here's my 38 to the downside. We're already finished the up move, or maybe not. It maybe not be done.
Yeah.
And I can start, now I can start reversing the process. Yes, Matt.
Yeah. So Garvin, a little bit back, he mentioned that the GU broke the resistance zone on the M5 and the M15. So there might actually be a trade there.
GU. Well, we were looking at the GU, I think, earlier today with the.
Yeah, you were. There's a
but-
couple of them that said that it's broken your resistance zone now.
Yeah, yeah. That was
but
a
it
nice
came
little
back
trade.
down, eh?
Oh,
Yeah.
it came back down. Oh, okay.
Well,
Let's see where are we at with that one? That was the one we looked at first thing this morning, right?
Yeah.
Well, actually, that's this chart right here. That's the one we're looking at right now. We're on the British US.
oh, perfect.
Let me get my template back up again. Let me clean this up. This is the one we had. We were on a 15-minute chart, I believe. We had a 15-minute chart. We had the up arrow. I think this was. Is this where we were? Yeah, about 7:15. Yeah, that's about right. Here was the alert right here. It was a nice big red zone that put on a 5-minute chart. We had a red zone sitting right there. It broke through that. But kind of came right about to where I think we said the target was. Am I right about that, or am I missing something here?
Again, what did you say? Sorry.
I said, did we hit the target? I had a target on that with a breakout. I had a target. Is that about where that target in reversed? Was I right about the? Was I right about the target area?
Did you take that trade or did you just draw it out?
I just drew it out. I didn't take the trade.
Okay, but there was a resistance zone there and it's gone. So if you would have taken it, that's probably where you would have taken your profit.
Yeah, I would have been out of the trade. Yeah, so actually that trade, I didn't take the trade, but that's the one that actually would have. Let's see, 15. Where's the 5? Yeah, we had a 15-minute arrow. I think that's what brought us to the chart. We had a 15-minute arrow, which is right. It'd been right at the close of this candle, so it'll be right at probably right about there is where it closed. There was a 5-minute zone. We were sitting right in the middle of a 5-minute zone. And I said, if it broke through that, we were looking at, I think we had we had a lot of room to the upside on this. In fact, I think there's still a red zone up here if I can get to it. Yeah, there it is right there. I thought that was the one. This was the ultimate target on this. But I was saying that there was a 5-minute zone that was sitting, we were sitting right in this. In fact, this money zone was about halfway. There was a zone right about, let me see if I can remember about how this was. I believe this money zone was about halfway up. So we had a little red zone pretty much about like that. If my memory serves me correctly. And I said if we could get through that, then we had room to the upside. We had a nice little pullback. Let's see if I can find, we had this. Okay, I'm gonna clean this up here. I'm gonna show something here. See if this kind of fits what I was talking about earlier. Okay, this is kind of what we were looking at. Moving averages are moving in the right direction. Here's our down move. Let's draw the fibs on this. Here's the high, here's the low, here's the down move. I'm on a 1-hour chart. This is a nice little exercise so we can see how it's playing out here. So here's our down move. Here's my bottom 25%, higher 25%. So here's the lower 25. That's where we're going to start looking to buy. Here's the upper 25%. Here's where I'm looking at to sell. And now we have our Fibonacci lines, which is going to be right here, 61. Look at that right there. I did not look at that beforehand. I promise.
Yeah, that's cool. Look at that.
And here's a 38. Okay, so now I'm on a 1-hour chart. Now you can see this goes back to one of the other questions we had earlier. I'm on a 1-hour chart. What kind of distance do we have between these zones? Between like the 38 and the 50 is a good starting point. That's 17 pips. That's tradable. Okay, so now we're going to come back to our 5-minute chart. All our lines are still drawn. These are the zones that we developed because of the down move. And now we're looking to see, watch this move to the upside break through the zones that we created on that down move. So these were, the down move created the zones. All I'm doing is marking them off. Now we're looking at it to come on the upside. So here's the break of it came right down to the 23%, which is right here, the lower 25%. This is a good starting point. Here's the first move up. Let's draw a Fibonacci. I'm going to take these other Fibonacci's off. I've got these zones marked, so I'm going to keep I'm going to take this one off. And now I'm going to say, okay, here's the lower 20. This is where we had the trend line started. Here's the low. We can actually look. Here's where it came back out. It retested it. Here's the low. Came out of the 25, came back in and retested it. Actually came back out a couple times and retested. Here's the move out. This is where it says, okay, now we're getting serious about getting out of there. So I draw a Fibonacci from here to here. And I say, okay, it broke. Here's a high. Now I came back down, and from here to, let's see where we at here. Let's see how far did it get back. It came back into the 61%. From this move to here, it retraced back. It started looking, I was looking at the 50%. I want to see the fact that it closed. This is where the high, it came up to this point and it couldn't close above it. So this zone here is still valid. Now I'm looking for the pullback. Where's my 15 pips? I'm looking from here. I want to see 15 pip pullback. So I want to take the trade somewhere around this yellow line, because I want to have enough room. It got to close above here. I have the room now. I want 15 pips to here. I want to pull back so I can get enough to get my 15 pips to this is my target. Comes back in, got my 15 pips. Now we've gotten in. Let's say I say, okay, if it comes back to this yellow line, I'm going to try and enter the trade. All my moving averages are in the right direction. Your stop, you're looking at a stop from here to say that's a 10 pip stop. I'm looking for a 15 pip stop on the norm. So my stop would be way down here for a target up here. And I'm only looking at 5, and really I want a 50 pip range, but I'm only going for 5 or 7 pips. So there's a really good chance that if this area holds, I'll be able to get my 5 pips, maybe even go for the 15. And you see it worked out, came back in, created a new zone, and then took off. Now we have the moving average up here. Let's take a look. Here's a cross. Here's the first. This is the strong move up. You're looking for the strong move up, then you're looking for the pullback. From here, crossed over the 15. Here's my target. Let's measure it from here to here. Well, there's if it can. So at this point, I need to have a pullback. I have the close above. Need a pullback. Again, I like at least 23% on the pullback, more or less depending on what I need from my target. Let's move this to a 1-minute chart. Maybe you'll see this a little bit better. Here's my close. Here's my 38% pullback. Here's my Fibonacci. Here's my 38% pullback zone. Closed above, pulled back. Here's my 38%. I can take the trade. Made a new high. And so I got in here. Did I get my 5 pips? Well, there's 11. It crossed over again, closed above. I can move this up. Where's my target? My target's up here. I need 15 pips. Come back to 15 pips, pretty much right at the yellow line. If it comes back to the yellow line, I can take the trade. Here's my 23 to 38% zone. Let's move it up. Did it come back in? Yep. Did I take some heat? Yep. Did I take a lot of heat? Nope. Here's my stop is below the 200 moving average. I'm good to take the trade. Take the trade, can move it up. There's my 7 pips. That's my second trade for the day. Boom, come back, comes back up again. Strong move up. closed above. Here's my move up. Where's my target? Target is up here, 15 pip target. I'm still looking for this to be my target. I want to be able to get in with 15 pips. So 15 pips is going to be right about into this little zone right here. Let's move it up. We're still, and then we're still checking our RCS tool to make sure that we still have the strength of the British pound. And so it moves up, comes back in. Where's my target? Up here. There's my target. And you pull back. Here's my 15 pips. I want to be able to get in here. I get in, bounces off of this, still in an uptrend. Do I get my 7 pips? Boom, I'm in. Or you could just keep on riding it up until it gets up here. It got up to this point, wicked up, couldn't close above. As far as I'm concerned, that move is done for right now, until I get a close above this area. And that, look at this, is a strong move down. That tells me that things are starting to reverse on this. Is it going to come up and retest? Probably so. If it does, I'm looking for a pivot. I'm looking for something in the upper 25%. So we can move this thing up to the upper 25%, made a new high, wicked up. Here's my 25%. If it comes up into here, I don't want to see a break to the top. If it does, well, then the uptrend is still continuing. Then I have to close above here. Let's take a look and see what the British pound's saying on this one. There's my British US. How strong is it? British in the middle, US is starting to close in on it. US is getting to be less weak, still weak, but getting less weak. Right now, it doesn't seem like there's a whole lot of spread between the British and the US. I'd say that the British pound has probably made its biggest move at this point. And now I'm looking to see if it comes up, retest this zone as this one comes up, anchor, see if it gives me a hit here that defines this trend line. And we also have a trend line from down below. You start taking these pullbacks and start drawing the trend line off of that. So I have a here, this is projected. And over this one is the low. Here's our new wedge that we're having. And actually probably maybe take it down here from the origin. Get this out of the way. Don't need that right now. And where's my blue line here? Here's the origin. Here's the pullback. Here's our 200 moving average. Tag that almost to the pip. And come on up, and here's a new wedge. Right now, this thing is in consolidation. Is it going to break out of the top? Maybe, maybe not. It's Friday. British. It's what time is it now in England? Here, anybody there? It's about 5 hours, so it's probably about 3 in the afternoon. So they're probably ready to wrap it up for the afternoon. So I'm going to guess that this thing's going to pretty much stay within this wedge right now for the rest of the day.
Yeah, they're just going to consolidate. It's the end of the trading week. Everything that the GBP has done is done at this point.
Yeah. So, but that's one way to play these range. You don't identify the big move that had happened, and then you start finding out once it breaks to see when it's going to start going up to the upside. But you want to be in the right direction, and that's where I use this little handy tool. This is where we use this to see, is the strength still valid? Is it not right now? The Canadian dollar, Japanese yen, Canadian dollar, Japanese yen, Canadian dollar, Japanese yen. It's on all 4 time frames. We could probably look and see at now we're also now into the US, getting near the US session. Against the yen, it's the yen's, they're probably in bed by now because it's Friday. So that may not be a great one on a Friday afternoon, but we can take a look at that and see what the CAD yen is. Do I even have that on here? I probably don't. Yeah, I have to go to my chart here. CAD. CAD in, pull the chart up, put my template on it. And let's see what it's doing. Let's go to a 1 hour chart. We have the 1 hour chart up. Here's our strong move down. Draw the fibs on it. Actually, we have a strong move up here. Actually, it's in an uptrend. There's the uptrend. Had the pullback, formed a zone. Here's our trend line. There's a high. Here's a lower high. Here's our trend line. I'll take it over to from here to here's an anchor. Here's a hit. There's a trend. It's coming right up to the, this is the anchor. Here's a hit. Here's a hit. Rejection. Came back up. Couldn't make it. Rejected harder. Formed another pivot. Here's the anchor. Here's a hit on the bottom. And right now this thing's testing it. Where is it? It's right in the upper 25% of the zone. When you start seeing all these things sort of consolidating and these methods start telling the story, here's the trend line, here's the 25%. That's not happenstance. This is a nice little energy point right here. You have a trend line, intercepting the Fibonacci line. That's a nice little energy point. Do I expect this thing to go up? It could, but if it does, I'm looking for it to be more of a trap up in this area. If it breaks the top of this and closes, well, now we're looking at a whole different scenario. But right now, my trend lines are from here. Here's my, so I'm going to get the bottom 25% here. Identify the zone. Identify the zone of the bigger moves. Identify where it's going sideways. It's going sideways in between this range. Is it trending? Yes, it is. It's trending inside that sideways range. This is what I tried pointing out yesterday when we were talking about this, is that, and now I'm looking for, as you see, we had this move up, came back down, tagged it, tagged the 25% right here, closed above. Now at this point, we start getting into our lower time frame. Let's go to a 5 minute. That's not a bad place to start, and see what the price action looked like on that 5 minute. And you just start, so here's the, so I'm gonna pull it up here. Here's where my trend line is. I probably have to scoot it up a little bit tighter here. Here's the bounce. Here's the first move up. Crossed over, tagged it. So let's mark these zones. Here's a 61. Here's a 50. Doesn't matter what order these are in. They're all the same distance. It's just the reverse of the numbers. We could probably reverse if we wanted to. And so this is the meat. This is the money. This is the meat of the move. Crossed over. Here's the cross. Let's get down to a 1 minute. See if we can pull that up. I think I need the 5 from this one. Came back down. So I'm looking at this move right in here. See if I can scoot that up here. Maybe mark it. I'll mark this just so I can find it again. That's probably it right there. Okay, so we had the close above this yellow line.
That's yesterday.
What's that?
The date on that's yesterday. Did you want yesterday's date?
It doesn't really matter. I'm just looking at the price action. Yeah.
Thanks.
I think that's, because here's where the zones were. Here's where the trend line is. But there again, we're just looking at the same theory that we were talking earlier. Here's the low, here's the high. Here's my target. Pull it back. There's I'm looking for a pullback to this zone. It pulls it back to that zone. 15 pips is basically the bottom of the next zone. These are about 15 pips apart. Pretty close. closed above. I can take the trade if I have get into my target. And you can see if you just held on to it, and again, you're looking for halfway up there. You're only looking for 5 pips. There's 7 pips right there. Made that very nicely. Come back up, find the top. Here's a pullback. Came back up. You're already out of that first trade. Here's the next move up. This is getting kind of tight with this, but you're getting the idea. Hopefully you're getting the idea. You find out where the high is, find out where your target is, find out where your entry can be, give yourself a 15 pip spread, go for half of it. Once it breaks, and look at that as the next target zone. Now we're back up in the upper 25%. Move's done. Now you start looking to reverse the process. Using the strength, like this is a nice big move up. This could have a, I mean, that's a move up there like that. That's 22 pips. There's several minutes involved with that, but that's the method, that's the theory, that's the strategy that I'm using to try to get in and out of these trades and try and look for the targets. Again, I'm only going for 5 to 7 pips, but if you can do that over and over again on a good move, it works pretty well. Like I said, I don't like taking trades on Fridays, but this was showing some of these were actually from yesterday, but
I think
that's all I have to say. That's about all I have to say about that. Any questions? How was it doing on time here?
We're basically done, man.
Basically done.
Right
Basically done
on
for
time.
Friday.
Yeah.
So
No, that
let me
was
check.
great. That was a great session.
Let me check the any questions, answers here.
No, it was very concise.
Nothing.
Good job.
There's nothing.
Yeah, so it's just trying to explain the theory and the strategy and the price action of how to try to just grab these few pips. And remember, you don't have to go for the big runs. What's important to do is have a tight stop. That's your profit regulator. The closer your stop can be, but you want to make sure you keep it well out of harm's way. Make sure you have some barriers in between where your price is and your entry to where your stop is. You want to have moving averages in the way. You want to have zones in the way. You want to have Fibonacci lines in the way. And if you can keep your stop.
You might want to close the gray box so people can actually see your chart while you're recapping.
Oh, actually, I was looking at the question and answers. But yeah, to try and make sure you have some barriers between your stop and where you are, and then just go for try and keep the stop as relatively as tight as you can. Give it enough wiggle room, and just go for when you get the right direction. Just go for it. Take the trade. I said I didn't take any trades today. I said I had a good week this week. My performance was well, and I just don't want to give it back. And so part of the thing about trading is even though you want to take, there's a lot of trades today I would like to take it, but the discipline says you just don't do it because your performance is more important than the money. Because if you have the performance, the money will come. And with that, I have nothing else to say. Any other last minute questions before I go?
No, you know what? I think it was great. Everybody was rapt at attention, so including myself.
Yes, likewise.
Oh, good. So anyway, I want everybody stay green, stay safe, have a great weekend, and we'll see you back Monday, and we'll continue more of the same. Take care, everybody, and be safe.
All right.
Yeah, have a fabulous weekend, everybody. See you on Monday.
Bye, guys.
God bless. See you Monday.